Happy Friday, everyone. It is Friday, the 3rd of May, 2019. It's 8:02 a.m. here in Chicago. Finally, a day where we can see the sky. This whole week's been rainy and yucky. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Am I blowing out your speakers this morning? Just let me know if I am so I can turn down the mic. This morning, the market sentiment, as you are probably well aware, we did get the non-farm payrolls and the unemployment rate. Those came out. That's, pretty major number. We got two key numbers in 1 week, so looks like next week's going to be pretty boring. But non-farm payrolls came in at 263,000 versus 190. Let me turn it down. Turning it down. All right. This should be better. Sorry about that. It's a little, it's a Windows thing where it just decides to change my mic settings at will. This should be clearer now. Anyway, 293,000 versus 190 expected. Private payrolls came in at 236,000 versus 188 expected. And change in manufacturing payrolls came in at 4,000 versus 10 expected, so that was off. Average hourly earnings came in at 0.2 versus 0.3 year on year, 3.2 versus 3.3. We also got preliminary wholesale inventories came in at 0 versus 0.2, and unemployment rate is the lowest since 1969. Remember that song, Bryan Adams? So a pretty tight labor market, yet we're not seeing inflation pressure. And we just, with the comment from the Fed about the inflation condition being transient, it just means that the Fed is aware and is ready to raise rates as needed. The market really is pricing in a rate reduction, but we'll see. Trade balance came in also slightly better, negative 71.4 billion versus negative 73, which means a deficit. So that's where we stand for the rest of the day. We do have a couple more numbers that come out. Not as important, of course. We get the market composite PMI and services PMI 15 minutes after the open. Half hour after the open, we get ISM non-manufacturing. That's a pretty high-tiered number, expecting 57. So 10 o'clock Eastern. 10 o'clock Eastern, expecting 57 on ISM. And then we have the Fed parade, which starts in about it starts at 10:15. We get Fed Speaker Evans. Then we get Fed's Clarida, we get Fed's Williams, we get Fed's Bowman, and then that's at 3 o'clock Eastern. And then this evening, when nobody's watching and nobody cares, we get Fed's Bullard. Okay, Sunday night, pay attention not only to the launch of the micros, which many FCMs are not going to carry that early, but at 9:45 Eastern, we get this, I don't know how to say this word. I think it's Kaizen. It's just a major release. Services PMI for China for April. The consensus is 54.4. This has been a market mover in the past. Just pay attention to that. What's the market sentiment this morning? The market is risk on for sure. The Nasdaq's up 58 points or 0.75%. The DAX is ripping up 0.5% at 61.5. The S&P up 14.25. The S&P is challenged yesterday's high. We'll look at the non-farm release and how that behaved. Very odd behavior there. And gold is up for some reason. The bonds are up 8 ticks. The dollar's up 8.5 ticks, and the notes are up. So it's just up and up. The thing that's still kind of lagging behind is crude oil. Crude oil's at $61.79, down 2 cents. And the euro is down about 17 and a half pips or something, down 0.16%. Let's take a look at what we expected yesterday in our review segment. We review. Voila. So yesterday we talked about a market where we expect a responsive push higher into 32.34. That's the expected initial behavior. Responsive push higher. And then I was looking for an impulse down for a push down into 15, potentially 12. That's the key plan for yesterday. And it was pretty much spot on. Here's what we've got. And by the way, the fact that it was pretty much spot on is luck. It's not some sort of award I should get. It's really just luck. So there it is, responsive buying into the overnight high, 32.25, and potentially all the way up to 34. Those of you who are at Convergent, I did narrate this trade the best as I could, and indicated that 32.34 is a key area above for a turn, and then it turned around, and there's your impulse down. Boom, right out of the range. Okay, why is this blue? No idea. I didn't change it. Right out of the prior range, and then it pushed all the way down, 29.01, almost to hitting the century figure, before it decided to... holy cow, things are not working right today. What is the story here? All right. Where it went to 29.01, almost to the century figure, and then it walked itself back to the mid VWAP. The point of control shifted down here, went sideways. We did have a small V-bottom test. V-bottom test before we pushed back up to the IB low, and I warned in the at the Convergent Chat channel, Head Trader channel, I warned that we have a weak high from yesterday, and that a push into the opening swing of yesterday, it is likely to then, which was a 29.20, it is likely to start walking itself to that weak high. We ran out of time. This configuration here is corrective. This is a corrective pattern. We did not get a continuation, which we haven't been getting to the downside much. And then this looks like a corrective pattern and likely to walk its way up, with a target being 32.75, which they managed to take care of overnight. Okay, so here's what it looked like on the short-term chart, 2-tick Renko. Clean this up a bit. And you can see that test down, and it comes right back to the scene of the crime of that test there, and it's holding steady against the first hour's low. This yellow line is called the IB low, and a push through there is likely to drive us back up to at least 32.75. That's how the structure or the context was set up yesterday. Okay, and that's what happened. So, like I said yesterday in yesterday's Trader Bite, the market is really behaving or auctioning pretty well. It's following pretty good structure, although it's reluctant to give us any continuation trades, which is really bread and butter type trading. Just not able to do it. It tends to move, then just stall and just sit sideways. Okay, so that's the review. Again, this is what we expected. Push up and then down out of range, and that's what we got. Push up, down out of range. And then this is all afternoon noise. In terms of what we did then in the overnight session, the overnight session is, you would imagine, just a drift up all the way. It's basically trading in a channel on the way up, and then we get this non-farm payroll release right here, which tests up on a strong number. Which, by the way, ADP came in. Let me check out ADP recent this week. Let me just switch back and look at ADP. ADP, where are you, my friend? ADP. So ADP this week was expected at 180,000, and we got 275,000. Okay, so it's right here. I'll show you where I'm getting this information from, so you don't need me and you're independent, as you should be as a trader. There's ADP. Expected 180, and we got 275, right? Now, this number's not been correlating very well lately, but if we push forward to non-farm payrolls, expected 185, got 263. Pretty good, right? So something that deserves a little more attention. Not that past performance is indicative of future results, but it's really important to see what that is. The S&P dropped to the midpoint, basically, on that pullback, and the market is basically putting on a profile that shows that there's no consensus on price. Really, there was a small consolidation here that put in this point of control, but this profile shows that there's really no consensus on price. Pretty blunt, jagged, just looks like a saw's tooth, and is exploring to the high side. The prior high was around 29.31, something like that, and it keeps squeezing higher. Here's how things looked like on Bookmap. Here's what the heat map looked like before the release, and at the release. You can see here I tried to sell it. Let me show you this. Trading small for the NFP. I tried to sell it right there, and I was just too late. I tried to sell the impulse up, looking for this rotation down, which would have been about 8 points. But let's look at the liquidity in the market and so on. If we drift back to how things looked before the release, this is what it looked like. And then as the market started, watch how these numbers just drop, and the change in these numbers as the non-farm payrolls comes along, right? So we have liquidity here, liquidity right here that's just stuck around. I mean, this is what this piece of software is so good at. At 29.32, this did not cancel at all. In fact, right at the release, it added 10 more. This was carried all throughout. Okay, so that line's been there quite some time at 32. Somebody really wanted those. You could see that it's white. This offer's white, which means it's heavy all the way through. Okay, so the market turns dark right here, right before the number, just usually about 15-20 seconds. Turned dark, and then immediately afterwards, the algos are turned back on. You can see a wall of offers and bids, and a splash down on the release. Let's move to that. See that release? Just the SOC for the release, or the scene of the crime, or the location from which this release occurred, is 29.2750. We would expect that to get revisited during the day session, and it took off, could not get to the 32, and then it sold off down to about 23.50 from about 31 or so, or 31 and a quarter, and then since then it has drifted back up. It has drifted back up and has continued to drift with a lot of liquidity above. Now the market, those of you who know order flow know that the market tends to move to size, because the market's job is to facilitate trading, and you need size to be able to do that. So the market is generally size when you see this, size is just a whole bunch of people looking to get out at these prices or looking to initiate, who knows, but they're offering. And so the market tends to move towards those offers and fill them. We end up busting through with a collision in that 32. We don't see it. It kind of fades away because there's more size that shows up top. This turns to gray. But there is some liquidity there because the market traded out. And here it is again, that same offer from the morning at 32. So very interesting to see the games, to be able to see through the games that are being played in the book. And that's why this software is important to me, at least. Anyway, as we look above, we see that below, look at these bids below. It's just an algo. The bids are just an algo that's following the market. Exactly 10 points down, 10 points out. That's just a market maker. That's really the heaviest bid below, this 480. But the offers above are pretty thick, right? They're really stacked up. I'm looking at full depth here. And so it's interesting to note that as we come in, because we want to see how that size is trading on the open to give us an idea of what the market's intentions are. Okay, so let's get back to our plan for today. But before we do that, guess what? It is Like Friday, and I would expect that you would take a moment and hit the like button on YouTube so we're easier to find. Please do that, and it helps me out. So let's look at today's plans. Today we're opening higher. Remember, we've been selling off for a couple days now. Okay, let's move this profile forward. We're in this big balance area. We still have that double top at 50, triple top at 56. Don't forget, that's about 20 points away. And overall, you can see that the composite in this area is really blunt. This composite's really blunt here. So there's a lot of price discovery going on in this range between 29.01. Well, it's 29.95 actually, all the way to the all-time high. There's a lot of price discovery going on, with the most attractive price zone being down here, down at 29.08, all the way to about 29.20. So from about 2900 to 2920, very attractive prices. This is what we tested yesterday, and then we're moving away. We're opening a little bit higher. So let's zoom out, or zoom in, actually, and then look at today's scenarios. Today's scenarios, we're opening on the edge of the range. Probably in range, not expecting a drive either way. It is non-farm payroll day, so there's a tendency to correct. But the primary scenario is likely to be an open auction that pushes higher, takes out the overnight high, takes out this weak high from yesterday. Remember, I talked about this blunt high. Pushes through the 29.34, which is a key area, comes back, consolidates at it, and then starts to move back towards 27. And then I don't expect it to push much lower. I'm expecting the market then to start drifting up and moving into the selling range. The next key price up is about 42 from here. Okay, that's the primary scenario. That's the most likely thing. That's the play that's likely to happen. So I'm going to watch carefully to see how it opens, how it treats that offer that I showed you on Bookmap, and see how that goes. If not, then we're likely to get responsive selling into 27. Okay, if we get responsive selling into 27, it's likely to push lower. I'm looking for an impulse back up, consolidate, push the high. If buy the dippers come in, which they have, then I'm looking for response, open, rejection, reverse, impulse up, push into this 42, and then start working its way into 45, 47 to push higher. That's 3. And in the least likely scenario, now that we have strong payrolls, I don't even know what color I use for 4. The least likely scenario is an open, test higher, drive down, consolidate, and in this case, the target is likely to be 19-ish for scenario 4. So, oh my God, how do you differentiate between these? How do you trade these? Simple. You just wait. Just wait to see which side actually gets the better rotations, gets better delta, which side is responding. Wait for the impulse. Wait for the impulse. Look for an unusually high rotation. And in the ES currently, given current rotations, that's 5 points or higher. So I'm on a 1 minute chart, 5 points or higher with less than a 7-tick pullback. That's considered an impulse. Trade from the side of the impulse. If we have an open auction and you're one of these open range traders, then you're probably going to get chopped up like you did for a couple days this week. It's better to wait to see what direction the market's doing and then trade from context. Okay? Anyway, I'll leave you with that. Please remember to hit like, and also please look for that Twitter poll that I put up yesterday. It's right here. Got 367 votes. This is going to be on for another hour or so, less than an hour. Please go find it, and I'll post a link for it in the chat here before you leave, and put in your vote. We're very interested to see what you think. Okay? Thanks for tuning in. Have a great Friday. Make sure you cover your risk today or watch your risk today. Thanks.